Good morning and welcome to this next presentation at ABG Investor Days. My name is Simon Granat and I work as an equity analyst at ABG, and one of the companies that I cover is Formpipe. And with us today we have Formpipe CEO Christian Sundin, who will present the company for about 15 or 20 minutes, and then we will follow up with a shorter Q&A session. So with that said, Christian, please go ahead and present.
Thank you, Simon. Christian Sundin is my name, and I'm the CEO of Formpipe. I'm planning to go through this agenda today. Just a very, very short introduction to Formpipe, who we are, what we do, the customer value that we provide. Then I will go back in memory lane a year ago, presenting the growth strategy that we presented with the Q4 report for 2020, and then I will follow this up by showing what the outcome became in 2021. So that will be my overall agenda for today. And starting with Formpipe at a glance, we are within the space of content services, a software company. We, in broad terms, you can say that we bring order and structure into digital information. And especially in the public sector, we're like the ERP systems, but for words. We make sure that the municipalities and central government customers get their digital information in order and be able to follow the case management process and all the way from a registration from a citizen up to a decision point and so forth. And in private sector, we're strong on customer communication management, document management, and are actually on speaking about ERP systems. That's where we are actually making the ERP system stronger in terms of document management and customer communication. We are on the markets of public sector in Sweden and Denmark, where we are market leaders. And then in the private sector, we're mainly approaching the market through an international only. We have a partner only approach on the sales of Lasernet, which is the product within customer communication management that we distribute and sell over the world through a certified partner network. And we are 274 employees at the moment, or at the closing of 2021. Mainly in Denmark, Sweden, and UK, but also growing in US and Germany with more partner support and sales and partner support people. So I mentioned the growth strategy. We come from a period, several years, with a strategy of executing on two things: transforming the business model to recurring revenue only, or more or less with a focus on growing SaaS revenue, and also improving the margin. Doing this gradually, and we've been successfully executing that. We've had a growth of recurring revenue of approximately 10% since 2014 up to 2020. And we have, during that time, despite the fact that shifting the business model from traditional license to SaaS actually puts a damp on margins, we've been successfully improving margins all over those years. But coming into 2021, we realized that we want to grow top line as well, and we decided to shift strategy to a more growth focused strategy. And with that, we also published new financial targets. We said that we will actually grow top line with 10% a year up to 2025 in average. And we will, due to the fact that we will still push a lot on the SaaS growth, and SaaS growth is recurring revenue. So coming 2025, the majority of the growth will still come from recurring revenue, but it will be supported by service revenue. So in 2025, we will have a 70% recurring revenue of our total revenue. And since that type of revenue, the SaaS revenue, is scalable, even though the first years of this strategy will put a big pressure on our EBIT margins, the scalability of recurring revenue will bring us back and above historical EBIT margins, and in 2025 we will reach about 20% in EBIT. And yet again, the SaaS business model or recurring revenue business model is cash generating, and we will thereby be able to pay dividend along the journey of this growth journey to our shareholders. The 2021 was, as I said, a start of a new journey, a paradigm shift, a new era in Formpipe, where we published the financial targets. We focus on accelerating our growth, mainly in Europe, but also a lot in the US, where we see great market potential for our Lasernet product. We are investing in increased sales and partner support resources. We will continue to drive, as I said, the recurring revenue, mainly SaaS, and we will also more actively, proactively looking for M&A targets to complement the organic growth that we're seeing in this strategy. However, 2021 was a year of investment. 2022 will also be a year of investment, where we continue to increase resources in our business. And it is to support the partner network, but it is also to support to build even more excellent deliveries to our existing customers in public sector. And we will focus the growth in private sector on the partnership we have with Microsoft Dynamics and Temenos, the banking system, where our product Lasernet complements their platforms in a very good way and make their systems even better. Both of these platforms are gaining market share, and we're piggybacking on their success on gaining more and more market share. So that is what we're doing, and what we want to do is to help them with getting on every customer deal that is made on these platforms. We want to have a partner there. We want that partner to bring Lasernet along with that offering, and make that partner more competitive to other partners when they offer Dynamics or Temenos together with Lasernet, rather than building those documents and stuff like Lasernet do better themselves. So the investment will have a damp on the future on the EBIT margins, and we've seen that in 2021. I'll come back to that, but we'll see it going forward as well. I'm talking about strategy for private sector, and a lot of the comments I've touched base on so far are referring to the private sector, the Lasernet and the Temenos growth journey. But we also have a growth journey in the public sector ahead of us. We are, as I said, market leader on public sector, and when it comes to case and document management, digitalization of the society in terms of public sector, municipalities, central government. We have customers like the tax authority, the transport agency, the Landbrugsstyrelsen in Denmark, and we have a lot of municipalities, both in Denmark and in Sweden. And we want to really grow with those customers and win new customers in the public sector space. Growing with the customers requires more resources to help them out with more things than we've done historically. So we're going for a one-stop shop strategy on the public sector, getting even closer to our end customers. And we will add, by M&A, additional geographies or markets outside of Denmark and Sweden by approaching and trying to find those acquisition targets to become the European one-stop shop for digitalization of the public sector. This journey will still be profitable. We have already a very big customer base. We have strong recurring revenue. It will not be the same growth journey as the private sector, but it will be growth journey, not as big ramp up as in the private sector, but in the public sector we will do this profitable, and we will do it in a controlled growth journey going ahead. While in the private sector the growth potential is even bigger than in the public sector space. However, it will also put a lot of cost initially to execute on the partner strategy we're having and going with the growth of Temenos and Dynamics here. So how did this play out for us then? How did we do in 2021 on this strategy, start of the new journey, so to say? Yeah, we actually grown the ARR, the annual recurring revenue on contracts from 260 to 304 million Swedish. It's a 17% growth year on year, which is quite an evidence of that the strategy is paying off. That is 37 million in ACV, in new built up annual contract value in order to do that. And that is compared to 22 million the year before. And that growth is then coming to 66% growth of ACV. That's a lot of numbers, but I think actually this graph tells the story even better. Looking on from how we've grown our SaaS revenue from 2017 up to 2020, and then the investment we've done in further support for our partner network, and you can see what I've put a circle around here. That we have now established a new level of quarterly ACV, and we see that growing in further going forward. So the investment is paying off. So revisiting the financial targets, the average annual revenue growth, we see that as very reasonable, that we will succeed with achieving those targets. And since a lot of the growth comes from recurring revenue, the 70% target for 2025 is very realistic. And yet again, the scalability of the model, we will take a few years hit on the margins, but the margins will come back with this business model, and so will the dividends as well. So that, I think, sums 2021 up. And we're looking for a similar journey in 2022 and the years to come here. So that's what's it. Thanks for the time and for listening.
Thank you so much, Christian, for giving us that update. Initially, I'd like to stay on the public sector side, and for some quarters, public Sweden have been on a decelerating growth rate, but in Q4 that actually turned out to be positive. Could you talk a little bit on the market dynamics in public Sweden? What are the pros and benefits on how that business unit is developing, and what could we expect in terms of the Alchemit acquisition contribution?
I will answer in several ways. The market in itself, Q4 is normally a strong quarter for the public sector generally. It's very budget driven, and it's not that the customers are unprofessional in any way, but at the end of the year they know if they have the money to spend or not. Early in the years, less. So that is one explanation on why Q4 is. It's not about spending the budget, it's making sure they have the budget in order to do that. So Q4 is always a strong quarter. It was also that we launched a product for digital signatures during the year, and that needs some reference customers and so forth. So it was sort of that we really got traction on the sales of that digital signature project in Q4 in public sector Sweden. But the other thing, bear in mind that we shifted business model to the one-stop shop from being strictly delivering everything via a partner network. And as I said, with the strategy, we want to get closer to the end customer. We have recruited a lot of people during the year in order to support that journey. However, it has been a struggle. Denmark and private sector growth strategy, they've been just tick in the box. They've gone exactly as we planned. In the public sector space in Sweden, we have not the shift of business model was more challenging than what we thought it was going to be. But we now the pieces of the puzzles are now starting to fall in place. And with the Alchemit acquisition, we really take a giant leap on this forward on this strategy with getting the competence in. It's a former partner knowing how to deliver our products, knowing how to talk to the customers. So we sort of taking that step all the way out to the customer base with one acquisition here. So it's very, very good step for us to get the ultimate knowledge about consultancy, building things customized for our end customer base in the public sector space. So, yeah.
And continuing on the, thank you for that. Continuing on the public sector space, public Denmark, as you point out, has been performing well.
Yeah.
Is there any specific customers or product that is driving that market, or what is the main reason for this, or is it just that business the unit is doing very well?
Yeah, it's doing really well. One thing was the big deal we did with Lantbruksstyrelsen in Q2, where we sort of extended our partnership with them and got a new frame agreement in place, making sure that we have a long-term relationship with that customer and making sure that they get the flexibility on who they buy from in terms of other things that are so they can put us out for competition. So the relationship is better than ever. So it's been a good growth of the consultancy revenue on that customer, of course, but that is within the grants area, and in the grants area we also see a lot of tenders coming out going forward. So we see that our position as on grants is really improving, but also in case and document management, which has actually been quite kind of a slow market for several years back in time. And we saw the market opening up, and a lot of more customers realized that they need to go out in tenders on case and document management. So both of those sort of platforms and the business value we provide are going good, well in Denmark. So we see, yeah, we're really executing on the growth strategy there, and we see potential to grow that even further. So that's good.
That's very encouraging to hear for the future. Another less positive topic is the circumstances that are occurring in Ukraine.
Sorry, but however, we bear in mind that it was sort of a catch-up thing. We were in Denmark, the first half was quite slow in consultancy. Second half was strong. A lot thanks to that, it was a catch-up on Lantbruksstyrelsen. So Q3 and Q4 might be a little bit too much to ask for in terms of going forward. So it will stabilize and be more smooth ride going forward. Sorry for interrupting. Yeah.
No, but that's good to keep that in mind for us going forward. About Ukraine, you have some sub-consultants in that region that are working with developing projects, and you've had that for quite some time. Could you give us any flavor on what is
Yeah. I mean, Ukraine in general is awful, of course. It's very emotional for us, as you said. We have a partnership in Ukraine where we have a lot of product developers, product development teams. We've known them for 15 years, some of them, and yeah, we have a very, very close relationship and with our people in Ukraine, even though they're through a partner. Yeah, the situation is just awful. However, the partner we're having a very, very professional, ISO 27001 certified, as we are as well, having executed excellently on the contingency planning, have relocated all 86% of the people to safer places within Ukraine or in Poland or outside of Ukraine. And the company, it's a 2,000 people company. We have, of course, much less than that, but they are to 85% degree have moved to safer places, and the people that not yet have moved are staying freely because they have families or stuff like that they still want to be in places where it's less safe. However, they are in production, so we still see we're able to talk to them on a daily basis. We continue to get new code built and so forth. It feels very odd, of course, being in that situation. They are in war and they're still producing code for us. And we, yeah, as I said, 85 or 86% productivity there. But we are taking it as it comes here. We are preparing to trying to get some of the people here to us. We are looking on finding ways to fill the gap if it becomes even worse in Ukraine. We have other partnerships as well, but as long as it's working fine with our Ukrainian partner, we will continue to support them with work because they really want the work. They want the normality in life and so forth. So that's what we see, and we will continue that path. But all our code, all our documentation, everything, if things goes really sour in Ukraine, we will be able to shift that to outside of Ukraine without any work lost. But of course, there's a lot of competence built up around our products in the team over there, a lot of history and experience, which will it will be a bump for us if we need to move that elsewhere or parts of it elsewhere. But we have routes for that as well.
Okay, thank you for giving a very comprehensive answer on that topic. Moving back to some of your business areas, moving back to private more specifically, it had a very good year in 2021. Would you say that business area is performing in line with your expectation, or is there anything that is holding back? You previously mentioned that one bottleneck could be competence and finding that. Is there anything else? Or?
Yeah, I mean it's a war for talent right now, especially in the U.S. The inflation rates are hysterical, and it's really tough to find people. That is, and if we find it's really expensive as well. So yeah, we would have hoped both for the public sector space and the private sector to been able to be even more than the 274 I mentioned. We've recruited a lot of people, but there's people approaching our people as well. So on the cost side, and make not only on the cost side, but also to attract and retain good people is difficult. And yeah, we would have preferred to be having even more capacity today than what we're having, and we would have preferred to give a much lower EBIT number last year than what we achieved, because then we would have been more successful in the recruitment and retaining of people. So that we're working hard with that. I think everyone is. There's a lot of movement in the people move around a lot in the IT sector anyway at the moment. So that is a challenge. Yes.
Yeah.
But in terms of performance of sales, couldn't ask for more when it comes to ACV and ARR of private sector. No, I could. That is definitely a very strong year, and we see that ahead of us as well. But if we should continue to step up on quarterly basis, we need to be more successful with recruiting even more people, and that is difficult at the moment.
Makes a lot of sense. In your last report, you mentioned a potential spin-off, or at least you're looking into the topic, whether a potential spin-off could be value accretive or not. And any flavor you could give on that topic? Where is this coming from, and what do you expect to achieve from this initial initiative?
Yeah. I mean, it's only an evaluation. We're taking help to see if that is a good thing. We see industrial logic, and we don't have a lot of sales synergies between private sector and public sector space. As you could hear from my presentation, we're selling different products with a different business model to different geographies in different verticals. So it's quite different business that we're pursuing in private sector compared to public sector. However, we're quite small. So this is, and we would be more focused separately. We could have the value proposition for the customer could be clearer rather than having it together. But we're still quite small. We have a lot of already realized synergies on the product development side, on overhead cost and so forth, and sharing all of those costs. So over time, I would assume that a split would be the recommendation that since it's in a few years from now, when we are significantly bigger in both parts, then it probably could make sense. That is at least a hypothesis we're trying out. But it could also be that, yeah, if we realize that now, perhaps it's easier to do it right away, or we realize that, yeah, there is no use of doing this because we will grow with acquisition, we will do this, and it works out. So we're open for all paths here actually, and we just want we've asked for advice and see if we want to pursue it, how should we then pursue it? That's also part of the question that we've asked. So, well, let's wait and see. I think the industrial logic is there, and then it's a matter if it's generate shareholder value or not, and so forth. But let's await the recommendation and whatever the board likes to add to that. So.
Yeah.
Yeah.
Thanks. And as a final question, I'd like to ask to put sort of the recent award you gained from Temenos in perspective, because you were awarded a Partner of the Year or Partner Solution of the Year.
Yep.
And Temenos is a large company, so this is obviously a very big achievement.
Yep.
How important is this for you as a company? You are starting to bundling some of your products. What does this bring?
Well, it's a tremendous opportunity for us, and for the ones knowing us and been following us for a couple of years. In the summer of 2020, we acquired EFS, a partner in the UK, that had the product Autoform that complements Lasernet, especially for the Temenos customer base. And that acquisition also put us much closer to Temenos. And I mean, we did occasional deals with Temenos, and that was traditional license deals and so forth. We shifted that around because Temenos wants to sell SaaS. We now have a lot of traction within the Temenos business and a lot more close relationships with them. And our ambition now is that Lasernet, together with Autoform, which we now bundle to within actually so Temenos is actually in a demo environment of Temenos. Autoform and Lasernet comes automatically installed in that for any new customers, and they can choose if they want to use it or not. So that's of course a tremendous opportunity for us to get the sales on every new Temenos customer out there in the cloud. So yeah, we're really pursuing that route. We want to help Temenos to be as successful as possible and tag along on their journey. So and we see great opportunities in that. Going forward, and the Autoform product, as a side comment here, is now also bundled in to the Dynamics offering. So we have now Lasernet and Autoform also coming to that. We call it Lasernet still, but the bundle is there. So we see great opportunity for that as well.
Very exciting. Unfortunately, we'll run out of time now,
Okay.
but we could continue all day, as I'm sure I would love to do that at least. Thank you all for listening in, and a special thank you to Christian for attending here today.
Thank you.